Hi, everyone, and thank you so much for joining us for today's session, How to Automate Your Finances, which is part of America Saves Week that we are celebrating here at the Harvard University Employees Credit Union. A little bit about myself before we get started. I'm our Community Engagement Manager, Migdalia Gomez, and I'm joined with my colleague, Sarah Scruggs, who is our Community Engagement Specialist. Sarah will do the second half of today's presentation, and I will do the first part. For those that are joining, just let us know where you're joining us from in the chat. We are going to be using the chat feature today for you to submit questions. You can also use the questions panel, and that will be on the top or the right-hand side navigation. Great, I see some folks are joining from Somerville, some folks from Boston, some folks from home. Wonderful. Great to see that you're able to hear us. Just how you let us know that you are able to hear us via the questions panel. Any questions that you have today, please submit them through that questions panel. Today's presentation, we are going to be using a presentation that was put together by our partners at GreenPath Financial Wellness. And GreenPath Financial Wellness is one of our greatest partners. They provide a lot of personal finance support to our community, and they do that through a variety of different ways. They do financial assessments. So if you were to call GreenPath, they would provide budget overview. They would help you understand ways that you can save money to help you budget. They also do housing counseling. I will say, if for those that all of you have access to speak to our mortgage loan originator. So if you do have specific home questions, I would recommend going to our website, which is www.hucu.org/home-loans, and you can set up a meeting with one of our home specialists, and they can provide you some support. But of course, GreenPath also offers that. And they also provide, it's not listed here, but they do credit counseling, which is one of the services that we recommend. They will pull your credit report for free, and they have accredited credit counselors that will walk you through your credit report and give you tips on how you can improve your credit score. This does not impact your credit score negatively, and it's a great way for you to be empowered with knowing what information can help you bring up your credit score or what you can do to continue to maintain a good credit score. They also provide debt management services. So if you have any challenges or concerns with repaying your debt, that is something that GreenPath can help you with. We also, a little teaser, we do have a debt repayment presentation on this coming week, Thursday. If you are unable to attend, you can go to our workshop page at www.hucu.org/workshops, or just on our YouTube channel, which is youtube.com/myhucu, and you can watch the recording, just like this recording will also be available. So what exactly are we talking about today? Where there's a lot about automating savings, but what are we going to get into? So what Sarah and I are going to do is we're going to provide some backgrounds as to just generally what happens when we're trying to save, and then some general tips on how to automate it so that you don't have to think about it. A lot of the things with life, we know that we should drink water. We know we should go for a walk, and we should exercise. We know we should eat fruits and vegetables. We sort of know, we know we should save money. But life happens. There are all these different barriers. So what we're going to do today, and one of the reasons we love this presentation from our partners at GreenPath, is that they use behavioral science and lots of different tips to really help us understand how we can create a good habit based off of small steps. So that's what we're going to get into today, how you can do a lot of little small steps to really give you a big result when it comes to your savings. And automating your savings is one of those big little steps that has a big impact. Now, with life, there's so many different things that can be barriers. So I want to ask in the chat, let me know what could be a barrier that can prevent us from savings. So again, you can let us know in the questions panel or just in the chat, whichever is preferred. What is a possible barrier that could interfere with your savings? Oh, okay, good. I see someone wrote competing priorities, childcare, paying off debt. Yep, that's a good one. I see someone else wrote income. Thank you. That's a really good one. Sometimes we just don't have the income to be able to save, because I think that ties in with what the other individual said with those priorities, competing priorities. And that's really the reality of it. When we're looking at savings, there are a lot of things that could interfere with our ability to easily save. We have sort of the numerical ones. It could be, well, the funds are not there. There are other, you have a limited number of dollars, and then you have to spread it across so many different areas in our budget. And then there's what I like to think of sort of life. There are other things that come into play. Sometimes it's just a time, like, oh yeah, I know I need to set it up. Or sometimes it's just if we're having maybe a bad day, maybe we end up spending a little bit more money because we treat ourselves to something. Or maybe it could just be sometimes the feeling of guilty, like, oh, it's someone's birthday. I feel really bad if I don't send them money. So there are all these emotional pieces that could impact our ability to save. So one of the things we want to do is we want to remove one of those barriers by really first looking at what is our budget. And this is going to be one of the biggest steps. And if nothing else, I would say take this as sort of your one tip after today's presentation. Make sure you review your expenses, because in order for us to automate savings and put money aside, we need to know how much money we have that we could put aside. And one of the ways to do that is actually to go through your budget. And if you don't have one, no worries. You can always create one. We have a lot of good resources on our website. GREENPATH, as you can see here, can help you with that. They can actually create a budget for you. So if you call in, they'll ask you some questions. And between the two of you, you and your GREENPATH counselor, you would be able to create your budget, and then they will email you this information. And if you have questions in the future, you can always call back and speak to that specific GREENPATH counselor or speak to someone else, as your notes will be in the system. Now, when you review your expenses, I like to think of savings as another category, so that you're not thinking of, okay, let me pay all the bills that I have first and then see what's left over and I'll apply that towards savings. One of the challenges with doing that is if you're not prioritizing your savings, by the time you get to the bottom of your budget, there may not be as much money left. Now, if you identify as a financial goal for yourself that you want to save X dollars, whether it's a dollar amount or you want to reach a certain dollar amount by the end of the year, then you're prioritizing that, making that one of the first line items. And then you're going to see how do you take the remaining funds that you have to fit other items on your budget. So it's really, I would recommend putting it at the beginning and make sure that you're prioritizing savings that way and looking to see what are some things you can do to reduce expenses on the other side. One of the tips that we have, and sort of the first step, is when it comes to automating our savings, is open a designated savings account. There's a lot of research that has been done that shows that when people categorize a savings account specific to a financial goal, they're going to be less likely to use those funds for something else. And it sort of makes sense. Let's all think, I want you to take a moment and write this down if you're able to. What is a financial goal that you want to save for? And right now, just write it down. I want to save for X. I want to save this much by this day. Once you have an idea what that financial goal is and what it is that you want to save for, let's say it's easier to have an example for all of us to follow. So again, make sure that you write down what is your savings goal for this year, specific with the amount, end of the year. Now that you have that goal, what if, I'll use let's create an example if we're saving for emergency fund, and maybe we want to go from $0 to $3,000 by the end of this year in an emergency savings account. Now, if I were to put that money in a general savings account and something else happens, I'm going to be more likely to pull from that because it's a pool of money. But if I have that account designated for emergency funds for 2021, if something comes up, I'm going to be less likely to pull money from that account because I already have an emotional connection to that account. I have already designated that account for a specific goal, and pulling money from that, I'm going to feel it more because I have already designated that. Another example, emergency fund may not sound as exciting. So let's say maybe you're saving for a wedding, or maybe you're saving for a college fund, or maybe you're saving for a vacation when we're able to travel. If I'm saving to go to Europe, I have now envisioned that account like, okay, this is the money that I'm going to use for Europe. This is the money I'm going to use to travel. So if something comes up, I'm going to be less likely to take that money away from that trip because I'm taking money away from an experience for future me. Another way to sort of help with your savings is also have your payments and bills and sort of your spending money be in a different account so that not all of your money is living in one account. So if I'm paying my bills, I'm going to use my checking account. My savings, they go into my savings. I'm not mixing the two because those accounts have different purposes. Every financial institution is different. For us at the credit union, highly encourage you to check out our website. We do a couple of different things to help our members with savings. We have holiday accounts, vacation accounts as well. So if you rather save for a specific goal and have the money automatically put into that account, we essentially could do that for you. You would set that up for us. And at certain points in the year, we would deposit the money from your savings into your checking. So it's, again, for the holidays, that tends to be a really popular one. So folks will save throughout the year, and then come November, those funds are deposited into your checking account after you have saved. We also have on online banking, we have a couple of different savings modules so that you can literally put in, I want to save this much. Let's say I want to save 5,000 this year. And it'll give you a breakdown of what that means weekly, monthly. You can add pictures. So if you're saving for a vacation, you can see that and start visualizing it as well. And that is all through our online banking platform. I recommend checking, if you're not a member of the credit union, check with your own financial institution and see what they offer. With a lot of online banking tools, typically you have to set them up through actual desktop, and then you can see the information on a mobile app. So I would recommend, if you have a mobile app that you use with your financial institution, go to the desktop version to see what savings options they have. So in addition to having different types of savings accounts, there are other options that they could have to help you track your savings. Right now, with the rates being lower, certificate of deposits, you're probably not going to see much return. Money markets tend to have a higher savings return. Most savings accounts right now are going to be lower. Again, this is just an indication of how we are and what's currently happening with our economy, but that should not dissuade you from saving, because even if you're saving and getting a low interest rate, at least you're saving and you're putting money aside, and it's better to save than have to borrow it, because the rates, even if they're borrowed, that's still money that you're paying versus money that you're earning. Another recommendation that we have for automating your savings is setting a specific percentage of your paycheck directly into your savings account. Now, I like to recommend this for a couple different things. One, I like to recommend this for retirement saving. If you are saving, which I hope you are saving for retirement, and if not, this could be a great opportunity. That could be one of your takeaways from today. Something that you do this week is set up automatic savings into your retirement account, is saving a percentage of your income. That way, when you receive a promotion, when you receive a raise, maybe a bonus, that automatically carries into your savings for retirement. Versus if I'm saving, and I'm always just going to use easy math for examples, if I'm saving $100 a week, and maybe I get multiple promotions, 5 years later, I'm still saving $100 unless I go in and manually change it every time. But if I'm saving 10% of my income towards retirement, and next month I get a promotion or a raise, I don't have to go back in to update. I mean, of course, if you want to, it'd be great to go from 10 to 11, but by having that percentage of my income, I don't have to change it. It's automatically going to take into account that I now have additional funds coming in. I also would recommend automating savings with a percentage for certain things such as travel. Travel is a good example because, and I do understand that currently we are not able to, but when we can, travel might be a good one because vacations may come up or opportunities. And if you're able to save 2%, 1%, whatever amount fits into your budget every week, then when an opportunity comes to go on vacation or to plan for a vacation, you already have some funds set aside. That's not to say that you may not need to save more, but hopefully at that point, you may not need to save as much more, as significantly more. For example, if I'm saving, making up numbers, 1% of my weekly pay towards travel, and maybe at the end of the year, I have, let's say, $500 or so saved, that's money that I've already designated to saving for that vacation. So instead of me having to think of, oh, now I have, 2-3 weeks to pay for this vacation, actually, no, I've already been putting money aside because I know that at some point I want to go on vacation, I want to travel. Other places that we have seen folks utilize this method of saving a percentage, aside from retirement and also travel and vacation, we've also seen this for holiday spending. We know every year holidays will happen just as birthdays. I've also seen individuals set up a birthday account. So they put money aside, and not so much for their own birthday, but to pay for birthday gifts for friends and such. So that way, when those holidays come up or when someone's birthday comes up or a special occasion, instead of them having to budget for it during my monthly budget, I already have the money put aside. So it makes it a lot easier versus 2 or 3 weeks before trying to figure out, ooh, where am I going to get the money for so and so's birthdays? And the other recommendation that we have, and we know this can, definitely be challenging, especially during these times, is just the mindset of committing to save more. With our economy, we currently have a potential another stimulus check that may be coming. For some of you, you may be in the process of maybe receiving refund checks. If this is the case, before you receive those funds, have something in mind, a plan in mind, like write this down on paper. I would say I'm going to save 10% of that income that comes in. I'm going to say 5%, whatever amount it may be that, but just have that set in mind. And when those funds come in, transfer those into your savings account. Many times when we have additional funds, it's a lot of times the initial might be, oh, I'm going to spend this money on maybe myself. Maybe I'm going to go out to eat, whatever the case might be. And that's not to say that's a bad thing. Definitely, budget for that, plan for that. But also let's commit to saving more. And I'm going to turn it over now to Sarah, who's going to lead us through the second part of our presentation.
Thank you, Migdalia. Hi, everyone. Thank you for joining us today. We are so glad that you're here. And I'll get started right where Migdalia left off. Maybe automating your finances. And the first part of this presentation was really talking a lot about automating our savings, which is our goal for this Week of America Saves Week. But I think there's a lot more to automating our finances that can then help us to save more in the long run. So some of these you may be thinking, that may be a good idea for me. And then I can also save more because of that. One of those things is online bill pay. I know with some companies, if you set up automatic bill pay, they might give you a discount. That could save you money in the long run. I know that is the case for my insurance company. Because I set up automatic payments, they gave me a discount. So if you're going to decide to set up automatic bill pay, one thing that we want to make sure that you know is that you have the money in your account to pay for those bills, that you've set aside that money and you know it's there, because we wouldn't want anyone to get any overdraft fees charged on their account because they didn't have sufficient funds to pay for that bill. Okay, so make sure that your due dates align with the days you need them to align with. Pay those bills automatically and possibly save additional money on the way. This can help with things like Netflix. I know for myself, I set it up for my Spotify. My Spotify account is the exact same amount of money every single month. I make sure that I check that amount to make sure it hasn't gone up any, but I make sure that that is set on automatic payments and it's just taken out of my bank account. And that works for me because I know, number one, it's going to be this exact same amount every single month. I know I have that amount in my account, and it's due on a date when I know that I will have been paid previously the week before. So for me, that works really well because I know exactly all three of those things. And that's what you want to test yourself with, those three things, before you set up that automatic bill pay. The way you would do this is you can do it a couple of different ways, really. You would either do it through the company that's giving you the service. I know for me with my insurance company, I set it up directly with them. They have the date that they take that money out of my account. But you can also set up online bill pay through your financial institution, and they can send the check on a particular day and get it to that service. That's what I do with my rent as well, because I don't always have checks available in my house. And so my bank will send a check directly to my landlord, and it gets there in time every single month. And I know I have those funds in my account. So that's two different ways that you can set up on automatic online bill pay. What you need to be careful of is if your due dates are not aligning with when you're being paid or receiving your income in some way, you can change those due dates. We recommend reaching out to the person or lender that has whatever day your bill is due on and ask if they can change it to make it easier for your schedule, because you never want to be in that position where your bill is due the day before you get paid. And so it's coming out of your account before you have those sufficient funds. And so really the step you need to take is changing that due date and talking with the person who you owe the money to. Say, is there any way we could move this around? Obviously, rent, not as flexible as something like possibly a credit card payment. You can move that around. I know on my credit card, it asks me, do you want to change around the due date of this? And, for right now, it's working for me, so I don't have to. But you need to think about these things before setting up that online bill pay so that you will always have sufficient funds in your accounts to pay those bills. We also need to think about, okay, we're saving all of this money. We've gone through those steps of how can we save our money automatically. And now we need to automate those extra funds to debt. We can possibly save money and pay debt at the same time. We want to make sure that you understand that those two things aren't total opposites of each other. It's actually important to see those two things as a cohesive group. Paying debt is going to save you money in the long run. And so again, just a little teaser. I know Migdalia said this earlier, but we do have a presentation on Thursday all about debt repayment and how that's going to actually save us money in the long run for America Saves. And you can sign up on our website for that. But automating extra funds to debt can be one way to start aggressively paying down maybe your highest interest debt quickly. And there are a couple of different things we'll talk about in Thursday's presentation with strategies for how to pay down debt. But make sure that if debt is something you're thinking about, that you are coming to that presentation on Thursday, number one, but that your savings funds that you are saving money on, you're working towards saving money, that you're also putting some money aside to your debts, because in the long run, that will save you money as well. This is something that Magdalia touched on lightly at the beginning, talking about retirement. But something that I want to talk about here is automating your investment contributions. When we get hired at a new position, a lot of times they'll ask, would you like to think more about a retirement account, or have a one-on-one meeting with, their vendor of choice. And it's so important that you take that step to do that. I know for myself, when I first started my first job, I really wish someone had sat me down and said, this is actually the most important thing you can do for yourself as a 22-year-old is to set up this account and get yourself on the right track for retirement. Because all of us know now that it is so important to get saving for retirement when we're young. And so if you're able to automate those investment contributions through your employer, of course, here at Harvard, we are able to automate those investment contributions. Then if you've never had that money in your paycheck, you won't feel the pain of it not being there. So we highly recommend setting it up for your first paycheck so that that fund automatically comes out and goes into your retirement. The important piece of the puzzle here too is that if your employer matches contributions, if that is part of the benefits package, make sure that you're contributing the maximum amount that they will match to at least. That should be the smallest amount that you're putting into your retirement account if you are able to. And obviously, there are definitely recommendations for you to go higher than that, but do what is comfortable for you as long as you are meeting that match. Let's say, I know here at Harvard, Harvard offers us a match on our retirement funds, and that is wonderful. And so I made sure when I got here, I immediately started doing at least that percentage. And now I've gotten to raise it a little bit higher and higher because I've seen that my budget has let me add more to that retirement account while I'm young. And then now I'm able to see that money grow over time. So automating those investment contributions, and like Migdalia said, it's important that you're doing a percentage of your um, funds to retirement accounts, because if you do get a promotion or maybe a bonus, that percentage will make it larger rather than just doing a dollar amount where it will stay the same. So if you say, I want to invest, $30 a month in their retirement account, then through all time until you change it, it will be $30 a month. And we're trying to make our lives easier here. So let's put it at a percentage. And so the next time that we get a raise or we get promoted, it just continues to take a percentage of that and continues to set us on the right track moving forward. Contribution advice, obviously, there are many different types of accounts to think through and to think about. There are traditional versus Roth, and this is something we really encourage you to empower yourself to learn a little bit more about, either through having a one-on-one conversation with one of your reps. Normally, this is free through your employer. Take advantage of that opportunity. Speak with them about those accounts and what may be best for you and your family at this time. I know for me, it was really important to have that conversation with somebody because I was really kind of confused by it all. I didn't know the difference between each different type of account and what would maybe be best for me at this time. And so it's important to think through these things. I mean, a lot of times your employer will offer those consultations for free. And obviously right now they're doing a lot of work to make sure that they are safe and to make sure that they are, either virtual or through the phone, but that you feel comfortable doing that. So we highly recommend speaking with your employer's consultations that they'll do for free. At the end of the day, none of this is going to be perfect. If you set something up and it's not working for you and your family, it's okay to change it. It's okay to say, maybe this isn't working best for me. Maybe I don't need to have these on automatic bill pay right now, but maybe I can in the future. It's okay to say, okay, let's put this aside for now. And in a month, I'll come back to it and look through it. Again, when we make these recommendations, we are recommending that you're doing something to make your life a little less stressful. So if some of these steps make your life more stressful, maybe it's not the time to do them just yet, but we want you to keep them on your list because our lives are changing and new things are happening every day, it seems. And so it's important to always evaluate and adjust for what works for your situation specifically. We do have a survey on this workshop, so if you could please take that survey for us, that is at the link that Magdalia just dropped in the chat, and we will send this to you after the presentation has finished as well. But you can take the survey there. If you have questions, we'd love to see those. You can drop those questions either in the questions panel or the chat feature, and those will get to me and Magdalia because we have wrapped up the presentation portion, but we'd love to answer any questions you have about automatic savings or automatic financial bills, whatever we can help with, we'd love to. And again, we just want to say thank you to our partners at GreenPath Financial Wellness who have put together this presentation, and we are so happy and thankful to partner with them throughout this whole thing.